Good morning. Today is Thursday, June the 8th. Time right now in Hong Kong is 7:32 in the morning. And today let's do a bit of a recap. Something big happened in the non-traditional asset classes, as has been the case since Monday. Now, before we talk about that, let's recap what happened on Wall Street in terms of equity markets. We are beginning to see some signs of some serious profit taking going on in equity markets in the States as well as in Asia. So on this background, we can take a look at what happened on Dow Jones. Basically, now Dow Jones still maintain a positive outlook overnight on a close-to-close basis. The highest traded was actually Monday at 33,805, and that is in reaction to the U.S. Debt ceiling deal that has been reported over the weekend. So this is a knee-jerk reaction to the upside. But since then, for the last 48 hours, we have not seen follow-through buying. In fact, prices has pulled back, although over the last 2 days on a close-to-close basis, the Dow Jones actually registered very marginal gains. And the current price is at 33,666 at the close on yesterday. So this may not be so evident in the Dow Jones, but as we progress to the Nasdaq itself later on, we will begin to see some serious profit taking going on, which may impact negatively on equity markets around the world. Then over in the S&P 500, we find that S&P 500 actually managed a new marginal high for the year at just under 4,300 points at 4,299.2, and this is followed by a pullback. And this area in which the market has been trading of late at is between the price range in which I think it is very vulnerable to profit taking, and it may appear to be the case this time. The level is 4,268.6 to 4,307.6.5, sorry. And although it is not evident from this chart itself to say that okay, there are evidence of profit taking, but it is setting the stage for that. And the nearest support right now, if the market do pull back, will be the February high, which is at 4,195, somewhere around 4,200 points, and this will act as the immediate support line, because that was the resistance line going into this new high for the year. So do watch out for prices to come back down. Okay, over in the Nasdaq, this is where I'm talking about. Nasdaq did not register a new marginal high last night. The highest it traded was the day before at 14,662.95, and you can see yesterday we have a very significant pullback. This is evident of potential profit taking by the big players here. So if the market right now continue to slide, especially if it close below the April 22 high, which act as a resistance now turn support at 14,300, it could signify a more serious profit taking that may actually ensue. Now between now and where the next support is basically looking at 1,300 points drop. So this could be a significant development if it comes to being. Okay, so do watch out for further weakness in the Nasdaq 100. If it drops down to 13,000 and cannot hold, you'll be testing the April low, and that will be a sign that if it continue to break monthly low levels, it is signifying a change in sentiment. So do watch out for this possible development here. Now, the more significant reversal pattern happens in Asia in the Nikkei 225. Yesterday, we have a new high for the year. Not only for the year, it is a 33-year high at 32,708.5, and following that, the market immediately has a reversal pattern. You can see this ugly red color bar followed by another 4 hours of drop. Obviously, this is the 4 hours time frame I'm showing you. So this is the evidence that I'm that I see that suggests that we are beginning to see more serious profit taking, in which over the last few months we have not seen anything like this. So the nearest support as far as I'm concerned is around 30,566 points, and if the market closes below this level this month by the end of this June, then it could signify a more significant and persistent correction that may actually unfold. Okay, so there's nothing between where we are right now and 32,000 all the way to 30,566. So we are looking at a potentially almost 200 points drop here. So 2,000 points drop here. So do watch out for that possibility. Okay. Over in the Hang Seng itself, Hang Seng has continued to rally yesterday. The highest attempt to rally was 19,410. So this level is actually just below a pivot point, which I mentioned many times over the week itself at 19,521. So if the market cannot cross beyond this level and stay above this level, then it is possible that it will unravel all the way to test back the year low at 18,000. So do watch out for today's development. If in the view of the Nikkei witness as well as in the Nasdaq, there is a real possibility this rally could actually be cut short and may see a total reversal. Over in the in the mainland CSI 300, the picture is even more dire. The rebound from the May low has been very shallow, and yesterday we have a price that actually took out the May low. May low basically was the 3,781.43, and yesterday's lows were 3,780.16. So it has effectively taken out the May low, in creating a new low for the year. So this is not a good development, although technically it do have some kind of support around this bracket of prices here. But again, we have to see what happened on Wall Street, and if the majority of big players are beginning to unload, then basically it may negatively impact the Chinese equity markets. Over in energy markets, we can see that oil prices remains positive, although the rebound here has been very tentative. We can see there is a three-wave rally here, and three-wave is definitely not something we want to see for a sustained rally. So technically this market here has a rebound of $70.08, but this rally has been without much of momentum. So top side, I think the $74.92 may still act as a immediate cap to further rise. Okay, so do watch out for the market to go into a sideways consolidation. Over in precious metal, we can see that gold prices actually went beyond my ideal price, in which I do have mentioned, I did mention that there's a possibility selling interest may actually emerge, and that level was originally at $1,960 to $1,966. Market went up even higher to as high as $1,970.25 before selling interest comes into being. So this overall direction is correct, but somehow the market has traded beyond my ideal price, and currently it is sitting at about $1,943. Will it continue to go down? There's a good possibility, because this pattern here suggests that we have not seen the end of this pullback. Possibly the market may even go as low as $1,919 to as high as $1,925. So that could be the real bottom for this run, for at least for the short term. So do look out for that possibility here. Over in the silver market, we also see that the silver market has actually went up to challenge the May 19 high, I believe. Yeah, May 19 high at $24.06. $24.02, with a breach at $24.06 overnight, but it couldn't hang on to its gain and slam back down to the current price of $23.44. And along the way, it took out the near-term support line, which I have redrawn. So this could signify that we may be seeing the top for this move here, and the market may be going back to challenge the $22.67 into the $22.28 to $23 bracket, which I have previously identified as potential area in which buyer may actually re-emerge. Over in the dollar itself, we can see dollar index has struggled. Okay, overall the fall from 104.62 has actually seen a pullback to 103.32 before it rebound back to 104.36. Now this pattern has, in my opinion, has not complete its entire corrective pattern. There is still the possibility the market may come down and test a 103 level in a three-wave pullback. Currently the market is just hovering at 104 levels, and there is the possibility it may come back down all over again. But basically what we are seeing here is the dollar is basically in consolidation mode, waiting for new development, which is likely to be what we are going to be expecting next week, when the Federal Reserve decides what to do with interest rates, whether they're going to hike one more round or whether they're going to pause. And then on top of that, we have the CPI numbers that's going to be released, and market will be looking forward into next week, no longer this week. Okay, so in the euro dollar, we saw a mirror image of what we see in the dollar index itself. While the dollar actually went down and then recovered back, we saw the same thing. We saw the euro dollars also pull back to this level before it bounce back. So right now what we are seeing, that the pattern that we are seeing in the dollar index is, like I said, a mirror image. So just do the opposite as what we see in the dollar index. Now there is this possibility, the low at 106.35 rally to 107.80 is not complete, that we probably will see a three-wave rally to test the 108.10 to 108.45 levels. So this is my preferred scenario. So do watch out to see if that actually pans out. Over in the sterling, we can see sterling has a much pronounced move. We can see last night we have a very ideal move in which I was telling you that the rebound from 123.68 could actually extend into 124.80 to 125, and that's what it did. Market went up to a high of just under 125 before it come back down. So it has completed that three-wave rally, and now it's going to come down in a much bigger pullback, possibly below the even 123.68 that we saw on Monday. So do watch out for another pullback in the sterling to test basically the May low of 123.10, okay, which is this level over here. Over in the Aussie, which is a surprise currency pair for this week itself, market did not expect the Reserve Bank of Australia to actually do anything on the interest rate front, which they did, okay, over the last 2 months prior to this week. The RBA, which is the Reserve Bank of Australia, actually has held interest rates stable with no more rate hikes. But yes, the day before yesterday, they actually did one rate hike to bring the interest rates to 4.1%, and that caused the market to rally because the market wasn't expecting any action by the RBA. So this kicked the market high to 0.6717 overnight, and this met with the immediate resistance at the 0.6710, and the market couldn't hang on and come back down. Again, this is a classical reversal, suggesting that a temporary top may already be in place, and if that's the case, we can see further losses in the Aussie, perhaps to challenge the 0.65 half levels over time. Over in the dollar Canadian, this is the weakest currency pair that we see as far as the dollar is concerned. It has been weak for quite some time. The market actually picked out at 136.55, and then last night we can see the market actually challenged the 133.20 levels, which is just marginally above where it was trading in May, and this is the May low, 133.10. Okay, so yesterday we saw a challenge of this level, and it held for the first time. So if we're going to see any kind of rebound, it's likely to be contained to 134.50, which is the immediate high here. So at the current level, do not chase this market ever lower. But however, if we get a minor rebound back to 134 half, that could be a much better area to consider. Meantime, I think the market would looks like it may take out the May low at 133.15 in this current iteration. Okay. Over in dollar yen, it has been a bit of a struggle, and dollar yen peaked out at 140.93, and it has come down to 138.42 before it bounced back to 140.45. Now, in my opinion, this looks like very much like the dollar index. It does not looks complete to me. Market currently is back into the price range of 140 to 140.20, which I deem to be an area vulnerable to selling interest, and we are beginning to see some semblance of that. If that's the case, we may actually see a pullback to test the 138 levels to as low as 137.35. So do look out for that possibility. Market is basically in consolidation. Now, the big news to hit the market this week is not in traditional market. It is all happening in the digital asset space here. We can see that over the last few days, the US Security Commission has been very, very active. First, it sued Binance USA for breaching the security law, for offering products which are not registered as security, in which the SEC believe they should be categorized as securities. Not only do they sue the Binance USA, which is the world's largest crypto exchange, they also sue the founder and chairman, which is CZ Chow, personally on this, and he will have to appear soon in court to fend for himself. Now, following that news, the market in Bitcoin actually fell off the cliff from 27,500, dropped to all the way to $25,400. And then just when everything is in the turmoil, the SEC follow up with another lawsuit against Coinbase, which is the US, which is the largest crypto exchange in the US, and that caused the market to go into, okay, what is happening here? Okay, but the curious thing is that upon the second announcement of that lawsuit against Coinbase, the market did not react violently in a sense to the downside. It actually only managed to take out the Bitcoin of the marginal low, as you can see in this chart here, to as low as $25,350, followed by a remarkable reversal and a sharp rally all the way back to 27,400, which is where it was before the SEC started to sue both exchanges. So this is quite peculiar. Normally, in such a news, you should expect Bitcoin and all cryptocurrencies to actually collapse, but it did not, at least not initially. Market saw a rally back to the pre-lawsuit price levels, although the price since has come back down to trade currently at 26,387, 357 this morning. So what caused this spike here? So right now we can see evidence, or at least news report that comes in that suggests that major players are shifting their holdings in these two exchanges to somewhere else, and there is a huge premium laid upon the major coins here, including Bitcoin, Ethereum, and the other XPR coin. And basically, we see people are prepared to pay a high premium to get out of their position in the US exchanges, because they believe the next move will be for the SEC to start seizing assets. So if there's going to be a seizure of assets for US exchanges, obviously you do not want to be in that position. You want to shift out your holdings to another place. So I think this is what is happening that caused Bitcoin to surge all the way up to $27,400 overnight before it comes back down. So basically, if this case deteriorates, we can possibly see further losses in the crypto space here. Now, don't forget, next month on July the 4th, which is US Independence Day, the FedNow digital payment system go live, and happening 1 month before the launch of the FedNow digital payment system. This move by SEC is actually very suspect. I personally think that this is a case in which they are trying to wipe out all competition before they launch the Federal Reserve version of a digital coin. Okay, so do watch out for this development here. In the meantime, this is all I have for you. I'll come back to you tomorrow for another update. In the meantime, you take care, and I'll see you. Bye-bye.